The facts of the matter are, on August 10th of 2020, we embarked on a Bitcoin strategy. And when we did that, the enterprise value of our software business was about $66 a share. And as I'm speaking with you right now, the stock is trading $329 a share. Our shareholders have made billions of dollars since we started this strategy. No one's lost. If you actually look at the performance of Bitcoin since we actually bought $250 million of it and embarked on a Bitcoin strategy, Bitcoin's up 101%. That's the S&P's up 23%, the Nasdaq's up 15%, gold is down 12%, bonds are down 15%, and silver is down 28%. So in fact, Bitcoin smashed every single asset. The only thing that outperformed Bitcoin in that time period is MicroStrategy stock, up 166%. So we actually performed 1.6x Bitcoin. I want you to come up with a strategy for a low growth, mid-size software company to outperform every asset class, all big tech stocks, and every enterprise software company by a factor of 3 to 10, right? This is the only one that you could have come up with, and we actually did it. I think what throws people off is that the stock got volatile. Like the way we've done it is with volatility. The company's stock traded a few $1 million a day when we started. Now it trades hundreds of millions of dollars a day. The open interest and the options have exploded. The stock, has exploded up, exploded down, exploded up. It moves all around, just like Bitcoin, which has gone through almost 3 cycles in the past 2 years. So I would say, to summarize, conventional critics and conventional mainstream analysts, they don't get the crypto economy, they don't understand Bitcoin, and they hate volatility. And those are the people that would tell you, take all your money, put it in a bank account yielding 1% interest, and just don't lose it and don't bother us. We've been planning to do this for 4 years. So I just think we got caught up in some very colorful media. You may know, most people don't, I'm the controlling shareholder of MicroStrategy. I have 68% of the voting shares. And I started the company 33 years ago. So I've been the CEO for 33 years. I'm the chairman of the board. I'm the controlling shareholder. And I've been talking about Bitcoin for 2 years. And about 2 years ago, we promoted a gentleman, Fong Li, to be the president of the company. And he was the president and the CFO. So he's been running the day-to-day business hands-on as the president for the past 2 years. And 99% of the activity of the business is selling software. So we have 2,150 people. We sell software, we make software. We have thousands of customers. We do thousands of transactions a quarter. We hire hundreds of people a year. We train thousands of people a year. All of the activity is enterprise software. So after 2 years as president, it made sense. It's very clear to the shareholders he was the heir apparent. And we hired a new CFO, a full-time CFO, Andrew Kang. He joined in May. And so once Andrew joined as CFO, that cleared the way for Fong to become president and CEO. I have been working with him hands-on to transfer the entire business to him for 7 years. It turns out that in the last 6 weeks, Bitcoin traded down. And when Bitcoin traded down, we ended up taking an indefinite intangible charge in our Q2 results. That, by the way, it's like a $900 million charge. It was very colorful. I think it was cited by some critical journalist. But we'd already covered 700 million or 750 million of that charge by the time we even reported it. It's just that GAAP accounting doesn't let you write up your assets. The way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average. right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. I mean, if we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown, because in essence, they had $50 billion worth of Luna and UST backed by $1 billion or $2 billion of real assets. So that was very unstable. And that algorithmic stable coin was just an accident waiting to happen. It's almost like they borrowed $20 billion and agreed to pay 20% interest on it. And they were going to issue equity to pay the interest. So they're going to issue Luna in order to pay 20% interest on UST through that protocol. And that was an accident waiting to happen. There's no way that was sustainable. But if you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. You've already heard Janet Yellen endorse Bitcoin as commodity. We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as an institutional investment grade asset being embraced by regulators, legislatures, and large scale investors. And the entire market's been very educated by this crypto crash. I think a great deal of the bad behavior has been flushed out. I don't think you can say everything. I think there's still a lot of unregistered securities in the crypto ecosystem, and it's undoubted that Bitcoin is cross-collateralized against some of those unregistered securities. And there's more regulation coming to anyone that's in this space, more clarity. So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear, right? I think there's a 99% rationalization rate that needs to happen. And so I just think we went through an pretty important deleveraging. The chair of the SEC was asked probably 6 times in congressional testimony and other public appearances whether Ethereum was a security or whether it was a commodity, and he wouldn't endorse it as a commodity under testimony and in the public eye. So I think it's above my pay grade to opine, and I know there is a big debate. There's going to be a debate, amongst regulators. There's going to be a debate in DC. So they will work that out. I happen to be of the opinion it's an investment contract. I think it's quite evident to anyone that spends a few minutes thinking about it. But, I'll leave it at that. People are free to make their own decisions. I think that Bitcoin is a million times better than gold, and is going to gradually demonetize gold over time. So no, gold will go to the utility value of gold, whatever that utility value is. But I don't think it's going to be adopted as money in the 21st century. I think Bitcoin is a better gold than gold. You can move it at the speed of light. You can see with the Lightning Network evolving that pretty soon we'll have 1 billion people able to move any block of Bitcoin anywhere friction-free. And so Bitcoin is digital money for the 21st century. Gold was metallic money for the 19th century. So I just think if you believe in sound money, then you should do yourself a service and you ought to sell your gold and you ought to buy Bitcoin, because Bitcoin is sound money for the 21st century and gold was sound money for the 19th century. Just that simple.